Class, are you guys investing or are you guys gambling like a casino? Let's go and let's talk about the difference between disciplined trader versus the gambler. Each scenario is going to go ahead and represent the scenario that we should be doing, which is A, being disciplined, being humble, not having ego, making sure we're being persistent and consistent within our investment methods. Or a gambler, someone who doesn't play within their risk parameters, does anything, overtrades, is emotional. And let's talk about the difference between the two. And which one are you? So the gambler's mindset. Focus on instant gratification, which is going to destroy you. Anything that comes super quick could definitely be lost extremely quick. Things take time to build, have to be planted like a seed. Okay. And the gambler's mindset, trader and investor, is going to seek quick, massive returns. And they view the market as a zero-sum game of luck, often driven by the excitement of large immediate payouts, instead of thinking of consistently trading the market year after year after year, generating income so they could stop trading effort and exertion for income. Instead, they could make their money, make the money. Instead of having that mindset, they're thinking, okay, let me just make this quick play real quick and try to pull out $10,000 from this trade instantly without any experience or anything like that. And the gambler's mindset, trader, is going to have irrational hope. They believe they can predict short-term price movements through gut feeling, hype, or just any type of randomness to the trade, ignoring historical data, quantitative metrics, or technical analysis, just buying things based off of the fact that, I think it's going to go up. I think it's going to go up. Okay. And without any true fundamental analysis behind it, make sure you have data behind why you want to get in, whether it be a technical data on the charts or fundamental data. Be like, this company's doing well. They just put an earnings report out of X, Y, and Z. I think the company's profitable. I think this dividends PE ratio is going to be worthwhile getting into due to the fact that it's pretty good, okay, compared to other dividends. Okay, so just examples here, but you can go ahead and use logical formations before you just enter in any trade. For the gambler, it's just going to be entering anything, and you don't want to be doing that. Plot your trades logically and take your time. And they treat capital as lottery tickets. And each investment is seen as an all or nothing bet. Never take your whole check. Never take all of your business income and invest it into one play. Don't do that. Okay, take your time, diversify, have risk into it. And that means that they often risk an unmanageable percentage of their total capital on a single position. Okay, so don't do that. Make sure you guys are controlling where your income is, spread it out, have it in different investments, and keep stacking cash. Okay, and the disciplined trader mindset, focus on statistical edge. Okay, and they view the market as a long series of probabilistic outcomes, expecting not to win every single trade, but definitely expecting that, I can only lose the trade when I close too. So having that mindset is really going to keep you in the game. If you're here to trade year after year after year, stocks, cryptocurrencies, etc., go up year after year after year. So the goal is not to win every trade, but to execute a positive expectancy model of over 100 plus trades over the course of a couple of years, gaining data, and then having an edge. And disciplined traders are going to be process oriented and understand that success is measured by adherence to a predefined trading plan, not by the single of an outcome of a single trade. So even if you make a whole bunch of money on one trade, you're still going to be disciplined. You're still going to be waking up, praying to God, being consistent, being humble, not losing sight of the plan. Okay? You can't just make $10,000 on one trade, right? Which might happen. Sometimes you catch a gap up and things like that. It might be unintentional money. Okay, but you can't do that and then play with a whole different position size the next day that's way over leveraged, not in any calculations of your risk parameters, thinking you're the best trade ever just because you hit one trade. Relax, okay, withdraw, take a step back, breathe, pray on it, be grateful, and then come back with a logical, process-oriented mindset and make the next trade. And the disciplined trader focuses on capital preservation and just cash preservation in general. And the primary objective is to protect existing capital, okay, which is risk management, with profit generation as secondary. Independent outcome and losses are budgeted expenses. So for example, the gambler buys a volatile stock based on a Reddit post, for example, or Instagram post, instead of actually looking at the chart, doing their own statistical and fundamental research, making their own analysis, which you should be doing, expecting it to double overnight, right? And the disciplined trader buys the same stock only after confirming its consolidation near a key support level in a trend, allocating less than 1 to 10% of their capital per trade. Okay, letting their money make the money, letting it stack up, and letting their capital just always generate. So the edge, the chance versus quantifiable advantage. So the gambler's edge. The gambler operates with non-existent or poorly defined methodology, and their decisions are typically random and highly discretionary and impossible to replicate or backtest. And no validation. They never test their strategy. They remember big wins, okay, and have confirmation bias, thinking that, you know what, it's going to do this over and over again. Now, I understand that if you find a strategy that works or some technical analysis that falls into place repeatedly, that's amazing. But don't expect this to work 100% of the time. Don't have an idealistic view of this will work, this will work, this will work. Don't think that you're really going to lose, but be comfortable with losing. You should only be investing in that you're cool with losing in this way, that if you win, you're not going to be emotional. And same thing if you lose, and that's going to go ahead and be able to cancel out any anxiety or fear that you're having on the markets. So the gambler is going to be following in other ways too, and trades based on news headlines, social media chatter, or recommendation from unreliable sources without performing due diligence and doing their own research. Don't do that, okay? Don't be a sheep. Do your research. Make sure you want to invest in something that you believe in, something that you feel a connection to. Be like, you know what? I think this is a good strategy. I think this is a good investment. I think this play is strong. And go ahead and get into it. And unseen rules. Entry and exit rules change mid-trade. And the plan is subjective. So if they say, you know, I'll sell when it feels right, or I'll hold until I'm even, instead of having logical checkpoints where they want to exit their trade and enter their trade. And we'll talk about the disciplined trader edge. The disciplined trader must have a statistically verifiable edge and a set of rules that over time yields a positive expensive T. Okay. So their win rate is high. Okay. And their average win percentage is high. Okay. And even if they take a loss, their whole account is not going to be destroyed due to the fact that being a disciplined trader means that you're not trading with more size than you should be trading with, meaning that even if you lose, your account's not going to be destroyed. Why? Because you're trading between 1 to 10% of your account. And the disciplined trader back tests and optimizes their strategy if anything is wrong. And strategy is going to be rigorously tested and studied and back tested over decades of historical data. And the trader knows the system's maximum drawdowns and expected monthly return range. And the disciplined trader has a written plan. Every scenario is detailed in a formal trading plan. And this documents defined setups and valid market conditions, risk rules, and exit mechanisms. Okay? The trader is going to calculate certain mathematical expectancy of their system. Be like, you know what, my win rate is this percentage. There's certain trading journal programs that can go ahead and calculate it. And I'm working on the StackMODE app right now, which is going to help you guys calculate your trade journal as well too. So risk management, annihilation versus preservation. And this is arguably the most critical divergence. And a trader's long-term survival is entirely dependent on rigid risk control, which a gambler fundamentally ignores. So I'll talk about the gambler's capital allocation. So averaging down, they panic when a trade moves against them and buy more to lower their average cost instead of just standing on business on their position. Okay, feel like, you know what, I lost. Let me go ahead and have a set place where I should be closing at. And if it exits there or if the price hits there, I'm going to go ahead and close and exit for a loss. Okay. But instead, when the moves are going against them, they're going to add more with that gambler's mindset, trying to convert the small loss into a big win. Instead, that small loss just turns into an even bigger loss most of the time. Okay. Turning into a catastrophic concentration of risk. And sometimes playing with no stop loss can be bad. So it depends on what you're investing in and how you're investing too. If you're on futures or forex, you should be trading with stop loss. Why? Because margin call is a thing. You don't want to get margin called by the broker and other broker money. So play with the stop loss, especially if you're on futures and forex. Okay, stop loss in crypto, you can get away with no stop loss, depending if you're buying and holding. Same thing with ETFs. But for futures and forex, definitely stop loss. Please do not gamble on futures and forex, playing with leverage especially. And they believe that the market must come back, all right? And they refuse to accept a small loss, often leading to a margin call or a total account wipeout, which is most of the time only possible on futures and forex. The gambler is also going to trade with emotional position sizing. And their position size is determined by current emotion or desire for profit, not mathematical risk. And they often risk very, very high percentage of their accounts, 10 to 50% of their account on one trade. And the gambler faces ruination probability. And that's the mathematical certainty of eventual losing all your capital due to oversized losses and emotional decisions. Now let's talk about how to be a disciplined trader. So a disciplined trader position size. So they have a fixed percentage risk. They never risk more than typically a fixed small percentage of their total capital per trade. Okay, so if you have $1,000 in your account, okay, and you're risking 1 to 10% of your account per trade, you're gonna risk between $10 and $100 of your account per trade. Okay, keeping your risk in place. And let's say stop loss. So a stop loss is placed before the trade is entered. So once again, especially if you're on futures and forex, You got to know exactly where you're going to exit at and where you're going to enter at. And it defines the point where the trade idea is invalidated and the risk is contained. And the risk position is sized. So the position size is calculated based on the distance between the entry price and the stop loss, ensuring the monetary risk does not exceed the 1% to 10% rule. And the disciplined trader ensures that even a string of 10 consecutive losses will only deplete the account by 10% if you're trading 1%, but if you lose 10 trades in a row, and I recommend 10%, 5 to 10% of your account if you're more experienced, because 10 trades, then you could destroy your entire account. But you shouldn't be losing 10 trades in a row realistically. Now, research and information processing. The gambler's information flow. You don't want to be trading like a gambler. So the gambler prioritizes novelty and social proof. Over objective data, information is consumed for emotional validation rather than strategic input. There's a reason why God says don't gamble. Gambling is wrong. Okay, it's bad. It's the reason why is because you don't have any jurisdiction in it. Okay, you're not trading with any logical output. You're not making monetary decisions with any logical output behind it. Okay, just throwing your money into the void, hoping for the best. That's not what we want to be doing. So hearsay and media hype. So they trade based on unqualified tips, sensational news stories, or expert predictions on cable television. Don't trade like that. Do your own research. Hop on your charts, hop on your broker, make your own analysis and decisions. And superficial charting. They may use rudimentary technical analysis. Okay, so you might draw random lines, okay, but ignore volume, market structure, or context. And their analysis is descriptive, not predictive or actionable. Okay, so you can go ahead and mark out something, right, that may look bullish on the 15-minute, but then on the weekly time frame, it's a whole different story. Okay, so you can't just look at one time frame either. Don't trade like that. Don't just look at one view. Look at the whole global perspective on every single time frame, and then make your decision. So, lagging indicators. So you can only get in indicators after price has already done its thing. So indicators are going to be pretty late. And getting it late is not always going to be a bad thing. Sometimes it's going to make it more confirmed within a trend scenario, but getting in certain indicators is just, it's not going to be it. Okay, like MACD, for example, it's very late. A lot of indicators are just pretty late. They can be used for confirmation, but you don't want to be relying on that. Okay, understand how the wicks work, support and resistance, and read how the chart needs to correlate. So the disciplined trader. So the disciplined trader uses a multifaceted, systematic research process to validate setups that align with their quantifiable edge. Okay, know what you're getting into. If you're going to trade break and retest, you're going to trade some break and retest. If we're going to trade reversals, you get in a reversal. Okay, and get some data behind it. Study your setups, back test it, paper trade it first. Make sure it works before you start putting money into the market. And the disciplined trader is going to utilize a blend of TA, technical analysis. You can go ahead and look at your patterns. If you're looking for break and retest, put your volume into play. Make sure it's something people trade, and look at the momentum. Okay, see how it's moving. And relevant fundamental analysis. See if it's a profitable stock. See if it's something that trends heavily to really form a complete picture. And track the events too. Know when earnings is going to be too. You don't want to get into a trade and the earnings is the next day. Okay, that's going to be a form of gambling. Make sure earnings is pretty far away and then make your decision. Even if you're a long-term investor, wait till earnings happens first and then go ahead and get in. And they're going to always be on top of the economic data releases or any stock or company releases that's going on, or any type of negative news that could affect the price movement as well too. Okay, you can convert it to couple of news sites which lets you fact it, like forexfactory.com. You can fact check and see all the news and the data reports and put that into correlation. And that helps a lot with futures, for example. And TradingView, for example, shows you all the stock news, and a lot of brokers do too. And look at the market structure. Focus on the who, what, where, and why of market movements. Why is price making resistance here? Why is price making support here? Okay, ask yourself these questions before you get into the trade. Put everything together in your brain, lock it in, and then go ahead and make your trade. And work on the directional bias of the higher time frames. Be like, okay, I want to get in the trade here because of X, Y, and Z, and then make your decisions. And the trader's analysis really answers, okay, why do I want to get in here? Okay, what's my maximum loss? And I understand we're on the charts trying to make some money, but don't lose yourself, okay? Take your time, build up your capital, be disciplined. Because if you full port your account in one trade trying to make some money, you're going to be wishing that you were disciplined and you took your time. So I'm telling you guys, being disciplined is going to be the most worthwhile decision in the long run. So impulse versus automation. So the gambler is going to be trading based off of impulse. You got to pretty much be a robot if you want to be a successful trader. So the gambler is going to be chasing the market, entering super duper late on big giant candles, getting in the trend late and just missing the whole thing. Okay, and getting pulled back on, getting wicked back on, and just living in drawdown. And they often buy at the high or sell at the super low after the move is already completed, catching the final remaining scraps and pieces. Okay, so revenge trading. After a loss, they immediately enter a new larger position to win back the money. And this is the fastest way to accelerate capital loss. Okay, don't do that. Okay, don't do that. If you take your loss, you gotta get off. Okay, plan yourself a better trade. Be like, you know what? Why did I get into this trade? Did this trade really make sense? Okay, and if it did, okay, cool. Accept that loss. Take a better one. Okay, or try again. Play something with better volume. Okay, there's probably some reasons why the trade didn't work out. Because if you notice, once you start playing S plus setups, they're going to work out a large percentage of the time. Not every time, but a very, very, very large percentage of the time. So ask yourself, why did I lose before you just get into the trade again, trying to make some money back? And keep a record too, okay? Know how much you're making, know how much you're losing, know how consistent you are, because it's really going to help you go back and see, you know what, well, I've been slamming, well, I've been crushing it. And a lot of brokers keep track of that, but you guys can keep track of it too. So the disciplined trader, you got to be like a robot in the game. You got to get up, be a robot, okay, grind. And the most disciplined person, the most robotic person when it comes to keeping their emotions stable is going to win, okay? You can't be letting fatigue, emotions, anger, fear, anxiety, and none of that get to you, okay? You got to be a boss, stand on business, and get to it. And execution is for a disciplined trader, and it's robotic and unemotional. And the moment the trade is entered, all necessary parameters, the stop loss and the target are set. And strict adherence. Traders are only taken when the market offers a setup that perfectly matches the criteria in the written plan, okay, the edge. And let's talk about the trade journal. Every single trade is logged with the entry, exit, reasoning, psychological state, and a chart screenshot. And this data is used to iteratively improve the edge over time, okay? You can go back, be like, whoa, okay, I was crushing it here. Let me stick to this. Why am I changing it up? Let me invest into this, okay? This led me to positive equity curve at the end of the year. Okay, let me stick to this. Okay, it's gonna help you guys keep your data, and you're gonna have a positive expectancy focus, wanting to crush your goals and be a better you, and just be better every single day. And you'll understand that the goal is not $10,000 profit today, but the statistical certainty that $10,000 will be achieved by repeating the process over a period of growing your seed, stacking wins, stack mode. Okay, take your time. Okay, it's not a race, it's a marathon, and be in the game for decades, years, okay? Don't just lose your account overnight trying to make a FOMO trade. Relax, be disciplined. I'm telling you, it's gonna be worth it to be disciplined. When you're chilling on the beach, when you're driving in the Lamb, when you're doing what you wanna do, when you're chilling in your house, okay? When you're put up because you stayed down and you were in stack mode, you're gonna be cheesing hard, okay? It's gonna be worth it, inshallah. So let's say, for example, the trader reviews their journal and finds their system has an 80% win rate, okay, on Tuesdays. And they use their objective data to confirm their edge. Let's say news is on Tuesdays and they notice that the news correlates with their edge, and then they go ahead and keep trading that, and they find a profitable way to make some money, for example. And let's say the gambler, okay, they review their account statement, sees a negative balance, leading to frustration, more reckless trading, booting up their account more, whole check into it, okay, and just losing their whole mindset, okay, and not sticking to a consistent edge, which is gonna help you grow your account over and over again, okay? Take your time. So, psychological mastery, detachment versus attachment. Trading is 80% psychology. I'd really say like 90%, okay? Because there's been times you can really give someone really good levels, and if they don't know when to close, or if they're greedy, they can still destroy it all, okay? So the final differentiation lies in how losses and profits are internalized. So the gambler, they're really attached to the outcome, okay? They have way too much greed. They're fiending to win every single trade, and they're very impatient, wanting to make a trade every single day too. You're not gonna trade every single day. It's not realistic. They close profitable trades early too, destroying the risk to reward because of the fact that they're scared, okay? It's why you gotta trust God, okay? Relax, okay? Only trade with what you're okay with losing. You're gonna be cool. Let the trade play out, and if you see something, believe in it. And they hold losing trades for too long, okay? Now, if you see your trades going in the opposite direction and it's way past your stop loss, okay, you could go ahead and close your trade, especially if it's way past your stop loss. You got to. Don't hold something that's clearly not gonna go ahead and reverse anytime soon. That's ego trading. And that's viewing losses as a personal failure or an indictment of their intelligence. And this fuels revenge trading and their need to prove the market wrong, which could lead you to throwing more funds into a loss. and mood swings. They experiences extreme emotional volatility. With D, before on wins, okay, extremely happy, cheesing hard, jumping up and down. But then when they lose, crashing out, sad. Okay, B, stoic. Whether you win or lose, just keep going. Stack mode, put 50% away, keep 50% in your account, keep stacking it up, keep going, go on to the next trade. Okay, keep getting richer, keep getting better. And the disciplined trader, they're detached to the outcomes. They have a sense of neutrality built into them. Okay, and you got to accept that a single trade is meaningless. Even if you make way more money on one trade than the other, that doesn't mean that that trade was better than the other. Did you stick to your process? Did you stick to your rules? Were you grateful? Okay. And stay humble after your wins. It's really going to keep you guys focused on the process, and which is really going to get you the next level, inshallah. So the focus is on executing the edge perfectly, regardless of the P&L, profit and loss, and learning from losses. A views of a losing trade that adhere to the plan as a successful win. Okay. So even if you didn't make any money on the trade, if you stuck to your entry plan, you stuck to your stop loss, you saw what you needed to see and it just didn't work out, that's a win. Okay, keep yourself mentally balanced, keep yourself mentally good, and understand that losses in life and on the market are just tuition for you to learn from experience and go forward. Okay, and objectify. Okay, they use if-then statements to govern their actions. If price has stop loss, then they're going to exit. If price turns resistance into support and they're looking for a long, they're going to enter. Okay, if price hits resistance, they're going to exit. Okay, so you guys are going to go ahead and have some parameters set. Like, if price does X, Y, and Z, I'm going to do X, Y, and Z. Okay, and that's going to help you trade logistically, robotically, and play the chess moves correctly. And mental discipline is going to be important. The disciplined trader sees a loss, not as I just lost $1,000, but I just incurred a 1R loss. You know what? It's okay, which is budgeted. I planned for this, and it's statistically necessary for the system to eventually produce 2R, 3R wins. Okay, so when you lose that 1,000, but then you make 4,000, you're not going to be mad. You're going to be like, you know what? I'm happy I only lost 1,000. I'm glad I didn't just risk my whole $10,000 account trying to make a whole play. Okay, because I just stayed within my risk, caught a nice trade, and I didn't blow my account even though I took a loss, and I made it back the right way. So don't be a gambler. Gamblers are driven by emotion. Don't be drinking alcohol. Don't be doing nonsense. Don't be trading with the mindset of, I'm going to come on and make some money. Nah, come on with the market and be like, you know what? I'm going to make some good financial decisions. I'm going to come onto the market. I'm going to enter because I have some logical parameters on why I'm about to enter. I'm going to enter because support is at this area here. You know what? Price doesn't want to go below here. This is safe. Let me go ahead and take this trade here. Oh, resistance just turned into support. Let me take this trade here. Okay. Take the money out of the picture. Focus on the charts. Take your focus off the P&L too. Okay. Get your eyeballs off the P&L. Don't be staring at that. Look at the chart. And the disciplined trader, focus on statistics. Focus on getting better. Okay. Understanding that the ability to even trade in itself and make some money just looking at the screen is a blessing. Okay. Straight from God. God is great. Okay. So let's go hard. Let's keep going. Let's keep pushing harder than ever. So don't focus on the money. Professionals focus on the process, the discipline behind it. And to succeed, you must first manage your risk, and only then can you manage your profits. Stay prayed up to God, keep grinding, and head over to StackMode.net for all trading education. Catch you in the next one. Peace.